The reason that Odd Lots kills, and I mean, folks, this is a daily basis here. Riley from St. Louis, she's popping down. What'd you call it? The original seltzer drink?
Oh,
I can't remember what it's called.
I don't know.
And then yesterday was our high noon day. We had to kill high noon because Lisa Mateo, she's got cases of it.
Yep.
I got a case of Narragansett Lager beer by my desk.
She's got the
Lisa's got high noon.
The White Claw.
Then there's Celsius. It's clinically proven to accelerate Joe Weisenthal's metabolism when he has to get up this early. It transforms Tracy Alloway's workouts with Celsius's delicious range of sparkling and non-carbonated flavors. So this was a detour for Odd Lots. You interviewed the people selling this stuff to us, Celsius?
It's actually kind of core Odd Lots at this point. We did an episode on Monster energy drink.
Yes,
if you
right.
don't like Celsius, I don't think you'll like Monster even more. But we did that a couple years ago. The share price of Monster just went through the roof. And then we kind of woke up and realized a little while ago that the same thing was happening to Celsius. So another competitor in the energy drink space. So we had to talk about it. The crazy thing about this industry is just how competitive it actually is.
Yeah.
If you walk into any local bodega, you're going to see like
Oh, yeah,
wall
stacks
of
of them,
different
walls of
energy
them.
drinks. So what does it take to actually be successful in that space?
Joe, in the old days, somebody would buy them. That was the gimmick. Is that still the truth today?
I think they're still bought. I think it's still the basic thing. You try to make something and sell it for 10% more and make some margin.
No, a lot
but
more,
it is.
I mean, this has got a $20 billion market.
Yeah,
cap.
these
This
are
is
big.
a huge
But I'm
company.
fascinated because, as Tracy mentioned, you go into the local deli and there's just this huge wall. And how do you get on the wall? We learned a new word. Your listeners, everyone should Google the word planogram. Planogram. And it's a new. And the moment you see the images, you'll instantly get what it is. That wall of whatever it is, whether it's energy drinks, toothpaste,
Who goes
detergent,
where?
all the colors, this multicolored, technicolor thing. It's called a planogram, and it's all very specified. And so, how do you get in that planogram?
Well, here's another term for Tom. The company, this is from the DES page on the Bloomberg terminal. This is it. This is gospel. The company, through its subsidiaries, provides thermogenic calorie-burning beverages, Tom. That's what you need. We need thermogenic calorie-burning beverages. So, I mean, what happens to the Coca-Colas and the Pepsis of the world?
Well, they strike distribution deals with these
Okay.
energy companies. So this is another fascinating aspect of the business. So, okay, we can come up with an energy drink. We can do the surveillance Odd Lots crossover energy drink. It would be interesting. And then we need to actually get it into stores, right? And the big way that you do that is by striking a deal with a major soft drink company, which would be a Pepsi or a Coke. And they have that distribution network that you so desperately need to get your stuff into the stores and then to get the shelf space as well.
Sparty emails in and he says, "Can you get back to serious Odd Lots talk and lose,
serious.
This is real
the,
business.
lose the high noon." Good morning, Riley in St. Louis. Thank you so much for listening. A number of years ago, a very serious and wonderful professor came out with any number of new books. Of course, there's The Banker's New Clothes, and it was basically on debt, and it was translated into 4,000 languages as well. Her name is Anat Admati. I've got a huge respect for her. There's a seriousness there, almost an old world intent to our debt and deficit. What did you learn in your Odd Lots discussion?
Her argument, she came out on Monday's episode, it was really great, is that basically we have come to accept that banks must be primarily funded by debt, and that people do not question that enough. And she comes from a traditional corporate finance background where plenty of companies are funded by equity or they're funded by their own earnings. And so she's like, well, why, sort of revisiting from first principles, the question of why have we come to accept that all these important institutions with retail depositors must be implicitly so leveraged? And her answer is, how do you avoid SVBs and how do you avoid all of these other bank failures? More equity than we currently have. And she argues that we could have a more stable banking system without sacrificing the credit availability of the bank.
Jamie Dimon doesn't want that, does he? Because that impacts his returns.
Yes, well, this is part of her criticism as well, that banks are far too focused on return on equity. But it's kind of interesting. I know, shocking.
She's at Stanford, I guess.
Yes.
Okay, there you go.
But it's kind of interesting to hear her describe the uniqueness of the bank per Joe's point. Like, we have this idea in our mind of banks hold capital, but her point is, well, they're not really holding anything. It's all debt funded. The real capital is that layer of equity, and we've seen time and time again that they don't want to raise equity, and when they try to, like last year around this time with SVB, they get in trouble because suddenly the veil is lifted and everyone realizes, oh wait, this banking model actually has some existential difficulties.
You guys are more attuned to this, I think, than I am. There's two parts of what the Fed function is, and one of them is this dreaded word supervision. Like when SVB went under, everybody went after Mary Daly and the Fed, macroeconomists, baloney. What does Anat Admati, what does the professor say about the new supervision required?
So she is very critical of regulators as well. I feel like that needs to be emphasized because everyone thinks of her as going after the banks. She goes after the regulators as well. And one of the more interesting parts of the conversation is her describing the sausage making of new bank supervision in Washington, D.C., and how there's always this pressure to build consensus. We know Michael Barr right now is trying to do that on the Basel Endgame proposals, but how do you actually do that when everyone has such distinct and varied interests?
I mean, if you think about the U.S. banking system, I mean, does she feel like it's fragile, or is it in good shape? Because the banks tell us, since the great financial crisis, this banking industry has never been in better shape. We've learned our lesson, kind of thing.
To me, banking is always like a confidence trick. Yeah. And, you know, you saw it with SVB. No bank in the world can withstand a 100% withdrawal on its deposits. No bank could crystallize the amount of losses that we saw in, held to maturity portfolios last year. And Anat, she uses this word like zombie businesses. And again, this is kind of where the equity problem comes in, because once banks start going out and saying, actually, we need more equity to make these businesses viable, that's when the veil is kind of lifted and you think, oh, wait a second, these businesses are actually really weird.
Yeah.